All right, everyone. My name is Maddie, regardless of what the title says. I'm just on Jen's account. Today, we are joined with Jesse from Dergalis Associates so that he can teach everybody how to run your business like a CEO. So I'm going to continue to let some last minute stragglers in here. We will be recording this, so it'll be available to you for reference afterwards. And then other than that, I'll just be monitoring the chat box. So if you have any questions throughout the presentation, feel free to send it in the chat box, and I'll make sure that we get a hold of that either if it fits in somewhere within the presentation, or we can open it up at the end to some questions as well.
Yeah, I think we'll be fine to ask questions along the way. So if you something, bring it up in the chat. It applies to the group. We'll definitely cover it. If there's something that you want to discuss individually, then John Paul or myself will follow up with you afterwards. So my name is Jesse Thomas. My partner, John Paul Brennan, is joining us today. So I don't know if maybe you don't get to see him when I'm out and about in different offices. So it's nice to have him join us today. You can put a face with a name. Today, we're going to talk a little bit on how to make your practice more efficient. I'm with Dergalis Associates. Dergalis Associates is a DBA, a professional team within Equitable Advisors, just like you, a professional team in the real estate world. We do the same here. Sometimes people get confused because there's a lot of names I'm associated with. You'll see my email says Rockland Wealth. That's my DBA, my personal DBA. And then I work together with their Dergalis Associates team. And then John Paul, he's actually a member of a third team that I'm on, which is Carbar Associates. So a lot of different teams. We're all here to help you. A lot of different resources that all of our groups kind of have pulled together. I've been with Home Sale now for I think eight or 9 years it might be now that I've been servicing the Home Sale group for Dergalis Associates. Dergalis has worked with Home Sale for I think like 20 years at least that they've been with them. I've been in the industry now for 30 years. The last 23 years I've been with this firm as a financial advisor. I'm a retirement planning specialist. Most of my clients are in retirement. My partner, John Paul, works more with people that are in the accumulation years, and we're kind of a good team in that way. The firm focuses primarily on working with real estate agents and helping them automate their businesses, helping them protect their assets and grow their wealth. Now, I'm aware that there are agents that have been in the industry for a while, and you've been doing it for a while, and then there's some of you that are new to this, but I think that this presentation kind of covers all ends of the spectrum. And myself, I've been in small business really since high school. I've had a small business. And our own business that we're in, John Paul and myself, is very similar to yours. I've never gotten salary. I've only gotten paid for the value that I bring to people. So I get paid for what I do. And in that kind of business, there's a lot of peaks and valleys along the way when it comes to income. To me, I've always enjoyed the opportunity of being able to go out and make as much money as I wanted. I feel that a salary would be too constraining for me. Like, this is all I can make this year. You know, I like servicing people. I like to help people out. And what's great about our businesses is that the more people that we help, the more money we make. So most of us tend to work more than 40 hours because of that. It's hard for me to say no when somebody wants to give me money. So let's move on to the next slide. So what we're going to cover today is we're going to talk a little bit about business structure, what makes the most sense for your business. We're going to talk about stabilizing income, preparing for the ups and the downs that happen. Your business can be cyclical, and so you got to kind of plan for that. There's the budgeting and tracking your business, and then how do we building product. All right, so first, let's just take a minute to talk about business structure. Now, JP and I are not accountants. We're not attorneys, but we work with a lot of businesses. I have an LLC of my own. I'm actually a part of a couple different LLCs, and I also have a sole proprietor income that I file under. So everybody that we work with is different. Business structure is an important decision for your practice. So the three big things that you usually hear out there is the sole proprietorship. That's what most people out and stay. Some people will set up an LLC, and some people will actually set up a corporation for their business. JP, the next one. So let's talk a little bit about the pros and the cons of it. The independent contractor is what most people do, and that's where you're getting the 1099 to your name. Now, this is the simplest, it's the easiest way to go, but it does have some weaknesses when it comes to protecting the business assets versus your personal assets. So sometimes people want to disconnect those two. Depends on how much you have. Now, again, when I started, I was barely even finished college. I just had a mattress that I was sleeping on and a bunch of books. So I didn't really have much to separate. So for me, I just started as a sole proprietorship, but I did go out and get an EIN number for my sole proprietorship. So when I file and have a Schedule C that is for the EIN under my sole proprietorship. The benefit of that is the IRS kind of likes that when you set up that EIN for your sole proprietorship. And it can help when you have things like when the COVID stuff happened and we were all shut down and they were offering those PPP loans. It was a lot easier to go get that PPP loan when you had an EIN number, because you can't set up a business bank account with your social. You need an EIN number. So it just kind of, it's smart to go out and do that. On the flip side, if you want to set up an LLC, the biggest reasons people do that is, again, to protect their assets. The next thing is that there is some tax savings, but this is a bit of a double-edged sword here with the tax savings. It can save you on the self-employment tax by setting up an LLC, but you got to watch, because sometimes I've met businesses that set up a corporation and they had all the income going to the corporation and they never paid Social Security income tax, which means they had no Social Security benefits when they get to retirement. Now, somebody's going to be super disciplined and take that money that they would have given to Social Security and put it to work to protect that. That's great. That's not really what happens. You know, people, they don't put into the Social Security and then guess what? They just don't have those benefits. So be careful of that. I like to kind of plan that out. The Social Security benefits are based on your best 40 quarters that you have. So, I mean, if you've banked the maximum like I have, okay, well, maybe at this point going forward, I could play some games with that. But the big reason I think people do it is to protect assets. It also makes you look just that much more professional when you have a business. So I bought my building that I have my office in, and there's a rental unit upstairs, an apartment. And so I set up an LLC, Foundation Planning Group, just to own the building and then to have all of the rental income and all the expenses and so on that goes on with this building is going to be separate from my financial planning business, so that if the tenant upstairs, you know, sues me for whatever reason, it's not getting involved with my financial planning business. Now that's a good reason to set up an LLC. Another benefit, though, of having an LLC or an S Corp is that you start to act a little bit more professional and you treat your business more professionally. I feel that sometimes the people that are getting 1099 and it's just under their Social Security, they're still kind of just testing this out. They're not really all in. And this business is really important to kind of be all in, right? You can't really do this part-time. You're either in or you're out. So let's go on to the next tab there, JP. All right, stabilizing income. And this is obviously really important. Again, peaks and valleys in both of our businesses when it comes to your income. First 4 years are really, really hard in our industry. Again, I've been in management. I did 8 years. I call that 2 tours of duty for our company. John Paul is actually a current vice president with our firm. So he does the hiring and the mentoring of our new associates these days. And I did that for 8 years. And so helping people build businesses over those 8 years. And I still have my Series 24. I still do hire people every other year or so and bring people into the business. So I've spent a lot of time helping people get through these initial years as you're building your business. And I think real estate's a little bit of a faster ramp up maybe than financial planning, but You still have those initial years where you sell a house, you get paid great, and how many months until you sell the next house. And so you've got these valleys. So you've got to realize that number one, you're your greatest asset, right? Your ability to go out there and get that business is invaluable. And whenever I work with any kind of business, I tell them, I'm not going to make you a better rate of return than you can make in your own business. What I handle for people is the side, their extra money. I can't beat the rate of return you can, get out of investing in yourself and investing in your business. It's also important to create automated systems for yourself as you're building your business. And so all of us got into business because we like helping people. That's why we got into this business. We wanted to help them, but there's all kinds of other things that you have to do in business. And in the beginning, you have to do all of those yourself. At this point, I only do this. I just meet with people and I talk a lot. And then I have everybody else that's on my team, 12 administrative staff and 12 advisors that help me do all the other stuff. I don't do applications and all those things anymore. But in the beginning, I had to do all of it. And I know all of you do all of it when you first start out. So you've got to create systems for yourself so that you make this job easier. You got to pay yourself a salary. It's important to kind of have this step where you've kind of budgeted how much you're going to pay yourself. And then that extra money, you don't consider that your income yet right now. You kind of set that aside so that you can level out the peaks and the valleys of the income. One of the things you're supposed to do as an LLC or an S Corp is you pay yourself a salary. So I didn't really spend a lot of time on this, but what people will do is they say, okay, I got 150,000 of income. I'm going to pay myself 50,000 for the W-2. And that's what I'm going to pay the income tax on, pay my Social Security benefits on, and then the 100,000 of extra that stays inside the business. And the next year, when I didn't make as much money, well, I still have that extra money that I had from the previous year. I'm still paying myself 50,000. So you've got to figure out how much do you need you're able to live off of, and that's what you're paying yourself. And then the excess you can kind of keep in the business to help level out those peaks and valleys as time goes on. And then obviously most important is you got to put a plan in place to pay your taxes. And this can be really sneaky, this last step, because in the beginning, you don't have a lot of income. You have a lot of deductions. You're using those so you're not paying a lot of tax. Maybe your effective tax rate was only 5 or 7% on the front end. Then you have that successful year and the tax bill comes and you don't have that money set aside. And that has ruined more successful real estate agents that were just getting off the ground than anything else is the tax man punching them in the side of the head because they didn't pay the taxes on time. Because the tax man can charge way more than any other creditor that exists out there. And that's really important. What do I have to do with the microphone, John?
So some people are saying that your audio is cutting in and out.
No.
I don't know if you have like an internal mic or an external mic.
Is it because I'm too loud? Because that happens all the time. Let's see. I'm just looking at my audio settings. Here's the microphone. Let me turn it down a little. Is that what we're saying?
You can give that a try.
How is that? Is that okay? Is it still cutting in and out? All right. Well, let me know, JP.
Yeah, it sounds better now, Jesse. Hopefully it continues.
All right. Well, JP, I'm going to let you then take this part as far as how to split up. Right?
Okay.
Oh, wait, no, I'll take the protect what you can't use, and then
Yep.
you're going to show how to do the payroll. All right? Okay, good.
Yep.
So again, you are your greatest asset. So the piece here that you've got to make sure you set aside, and this is obviously where most realtors kind of drop the ball, because with your normal W-2 job, stuff kind of comes along with that job. With one of the pluses and minuses of being your own business is that you kind of have to cobble together the benefits yourself. So a lot of people didn't get into this business to be benefit managers, and so they don't do this step. kind of roll the dice, and which is dangerous. Because again, since you are your greatest asset, if you can't get out there and make the sales and do the prospecting, and you're not going to make the money. So you've got to make sure that you're healthy. So the health insurance is really important. Obviously, health that happen can ruin you financially. So we've got to have that set aside. And this has gotten better and better and better for realtors over the last 20 years. In the old days, it was just something you didn't get. And now it's something that is very attainable. You just got to reach out for help sometimes. And so Associates has a lot of different outlets there to help you. On my own team at the Rockland Group, I have a health counselor. She's my director of operations, but the other hat she wears for my clients is a health counselor. So she can help you identify, you know, should you get it off the exchanges? Should you get it private? Should you get it from your spouse? All those things can kind of help you compare it. So if you need help with that stuff, just reach out to us and we'll help you figure that out. Disability insurance. Again, if your house is really like dependent on your income, then you've got to make sure that you've got this set aside. I'm the sole breadwinner in my house. My wife stays home and handles the kids in the house. So if something happens to me, I got to make sure that I've got my income protected. So I have as much as they possibly will let me have. I got the group stuff. I got the individual stuff. So I always joke that the easiest thing that would happen is for me to become disabled. The hard thing is for me to work and put all the time in until retirement. But disability, I'd be set. And then life insurance. If something happens to me, obviously I got to replace my income for my family. And so this is different for everybody. What do you want to have covered? If you need help with this stuff, let us know. Most people want to make sure that they get debt taken care of, they get education funding, you know, planned out, and that they have income replaced. Now, that doesn't mean I have to replace all of the income that I make, but how much income is needed in the household? At the very least, I want to replace that. And lastly, we also have long-term care because while it's not something that kind of comes into play, hopefully, while you're working, sometimes it does. I've had a couple of cases where we needed long-term care from a stroke that happened while somebody was still working. But usually this is something we want to plan out before we get to the point where we're going to need it. Because if I'm starting to look at long-term care in my 70s, it's not really something that I can do anything about it at that point. So you kind of have to plan this out ahead of time. But again, most of you got in the business to be real estate agents, not to be benefit managers. So if you need help with this stuff, let us know. Again, we can work with pretty much any insurance or investment company out there. So we don't have any axe to grind. Our goal is to help you get these things taken care of in the most efficient way. Next one.
Okay, so really this part is really talking about automating your practice there, and this is something we can definitely help you with. But there are a few things that you're going to want to make sure that you're aware of when it comes to just making sure that you're on the same page with your practice. So first and foremost, we definitely advise having a business operating account, to Jesse's point there of kind of keeping things separate from your personal assets compared to the actual business there. And then with that being said, with business, in fact, some models say even more than 2 months, but having good capital in a separate business reserve account would be helpful, just knowing things can go right in business, but also things can go not so right at times as well.
Hey, JP, before you jump on to that next one, I just want to talk about the business operating account. Again, just to use myself and my own business as an example here. The LLC that I set up to own my building and to own the rental property upstairs, I'm the only member. So there isn't much of a legal distinction between me, myself, and my LLC because I'm the only member. If I got other partners, that helps, again, separate and create a different distinction between my LLC. So to help reinforce that distinction, I have my own business bank account for the LLC. I don't need that. I could just keep bills out of my own bank account. I'm the only member. But then if I have a problem and I go to court and I've commingled everything, they're going to say, this doesn't really, it's not really separate. This is your own bit. This is you. So it's not provide any protection. So that's, again, another real reason to kind of keep things separate. Go ahead, JP. Sorry.
Okay. And then on the other side, then of course, still focus on the personal, you definitely want to make sure you have a personal emergency account. Most advisors out there say 3 to 6 months emergency expenses, just of course, if things could go wrong. such as like an HVAC system going out or needing a new roof. And then in terms of a personal checking account, you want to make sure you have, of course, good savings and access to liquidity. But the one account I just went over, just bypassed briefly, was the tax account. And Jesse talked about how Uncle Sam can sneak up on you. And one of the great things about working with Home Sale and working with our partnership with them is that we're able to automate that practice through commission deductions to make sure those taxes aren't a bear when it comes, March or April for the following year. To that point, just wanted to share this kind of for the visual learners on the call there too. When you think about getting that commission check, I would ask yourself today, am I taking advantage of all the opportunities I have access to build a business operating account for myself, as well as making sure that I'm taking care of my taxes? And if not, we can definitely be a voice of reason to help give you some feedback on how to best navigate that. To help even a little deeper there, to break it down on the commission side of things, let's say, for example, you have an $8,000 commission. Both myself and Jesse can advise you to the best of our ability how much should be going to help you with your taxes, for example, and or retirement planning, if that's important to you. The beauty, once again, working with us is that every commission check coming through, we can actually set up through payroll there at Home Sale. So we can then earmark a certain percentage to each of those respective accounts that we can help you with. Could you do that on your own? Absolutely. However, though, we get a lot of pride and joy knowing at the end of the year when folks have not only taken home great pay and their income from your efforts of you guys working hard as realtors, but both Jesse and myself pride ourselves in making sure that we are helping you navigating the challenges of saving for taxes as well as saving for retirement accounts. And this is something that Jesse and I can definitely help you navigate with something that we refer to as the asset map. So a lot of you guys may have heard of this from Jesse when he comes out to the offices to visit, but this asset map tool is a living, breathing document that we can actually take an inventory of all your accounts, your current income, your debts, your assets, your rental income properties, your real estate holdings, as well as your respective retirement and savings accounts, and kind of put together a model for you. So then therefore, when you come to myself or Jesse and say, how much should I be putting into my tax account? Or how much should I be putting into my retirement accounts? We can give you some unique perspective going through this tool. And this tool is completely complimentary. At the end of the call, we'll definitely share with Jen and the team to share out loud or with the group a sample for you guys to take advantage of. But every realtor we come across, we always encourage them to complete an asset map, just because one, it's pro bono, it's complimentary for the service we provide, but more importantly, can give you some clarity on making sure you are putting enough savings away to avoid conflicts with Uncle Sam, and obviously make sure you guys enjoy your retirement when you guys decide to do so. So that's something we can always do for you guys one-on-one. Jesse, anything you want to add to that?
Well, again, just from also an estate planning standpoint, I've been talking to my 3-year-old who keeps bringing up the topic of death, which is very uncomfortable. And so we've been like, how to discuss it. And I've told him everybody gets 100 years, right? But we don't all get 100 years, and we never know when that date might come. And one of the things that happens is a lot of anxiety and stress gets created because the people left behind don't always know what the person. Mm-hmm. We're not going to start telling everybody what we had. We usually keep that close to our chest, but it's good to have it somewhere. And so I like to do these asset maps because when I do get that phone call and I sit down with the beneficiaries, I usually will bring this asset map and I say, okay, here's the things that the person had. And here's the things that we can move now. And here's the things we should wait till later. I can talk about the taxes and so on. And I find that it can take away a lot of that anxiety and stress on the front end. I mean, you hear stories about people dying within 6 months of each other, and it's not always heartache. It's really because of anxiety and stress. Because for some reason, the financial planner of the couple always seems to be the one that goes first. And then the survivor's like, what? I don't even know what the bills are. I don't know where they come from. I mean, it can be really, really anxiety ridden. So this is a great idea to do. Again, all of our services, we don't charge a fee for. So when we're helping you with planning and so on, when it comes to actually placing, if somebody wants to get a product or something in place, of course, we always talk about the cost of things. JP and I are fiduciaries, just like all of you. Our job is to give suitable and objective advice. But it really kind of starts with the front end and understanding your client, same as it does for you. It's very important to kind of understand where your client's coming from so you can give good recommendations. All right, that's all I got to say on that, JP. All right, I don't want to harp on this too much, but this is really important to make sure that you got your taxes under control. So best practice is to pay in 4 estimated tax payments. Making one lump sum payment can end up leading to higher costs. I don't have a problem paying Uncle Sam, or I don't object to paying Uncle Sam. The problem I have is I don't want to pay extra.
Mm-hmm.
Let's try to keep as much as we can in our pocket. And again, the fees and the penalties for not paying on time can be really ridiculous. And then if you get behind that wave, just like surfing, it's all but impossible to get back in front of it. All right, growing and building. So now you've made it through the initial few years and you're growing your business. So how do we continue to grow? And one of the things I see with all businesses is that after that initial growth period and you start getting your act together, you hit the ceiling of complexity. Because again, you're uniquely good at a few things, but you have to do all these other things that slow you down all the time. And so you've got to delegate. And how you do that is build a team, hire staff. A lot of people go, well, I don't have any money to hire staff. Well, you're never going to get to the point where you have enough money to hire staff until you just bite that bullet and you do it. So whether it's, for me in the beginning, it was hiring college interns and getting work for free for college credits, and then starting to hire somebody part-time. And now I've got a staff, I think we're at like 400,000 for payroll at this point. But, you know, you've got to build it. And sometimes you got to kind of jump in and do that ahead of time. And every time you hire somebody, it will always end up paying dividends in helping you build your business. Marketing projects and client events. I mean, this, I'm not going to spend a lot of time on this. Home Sale does a phenomenal job in this area. So, you know, growing, making sure that this is a prospecting business, right? We all know that. That's what sales is. It's the same as my business. So you've got to spend some time thinking about that. The beauty of my world is that, and the reason I chose this firm is because I got to decide who I worked with. And that was, to me, the most valuable. When I was in the banking world, I had to work with everybody who came in the door, and that's not really what I wanted. I wanted to be a little picky. It's not really about assets or, you know, how much money somebody has. For me, it was really just more about respect. So I wanted to kind of work with people that I liked and they liked me, and that's perfect. And I'm sure you try to build the same kind of practices. You also need to invest in your future, because while a lot of people will continue to do real estate into your typical retirement years, it's better that you can do that because you want to do it, not because you have to do it. And the big challenge there sometimes is that health can have a different plan for you. My mentor for many, many years, unfortunately got ALS in his 50s and passed away at 61. And I know he would have worked at least another 10, 15 years. He loved what he did, and he did it literally up to the end. So we don't always have the opportunity to keep working. So what I like to say sometimes instead of retirement is financial independence. When do you want to get to financial independence so that it's up to you whether or not you're going to keep working? But similarly to you, I also think about, okay, at some point I'm going to start to ramp it down. And that's why I've built this team, because I want to continue to build on the brand and have it to pass off. And I see Gary and Mary here have joined us as well. And I know that at my last event, there was some talks that you guys were having and Home Sale is doing now to help you also think about extending your practice beyond you and thinking about that ahead of time. Because when my business owners come to me a year or two before they want to do that and they want to sell their business, it's not going to work. That's something that they really have to plan out. And a lot of times when I meet a business owner and they just start the business, I ask them, what's your exit strategy? Because we got to plan that out way ahead of time. Who's going to buy your business? Who's going to continue to grow it? If you think you wanted to. And most of us, why'd you put in all this work to let it just go away? And I know it's a crime. It happens all the time in real estate. People just stop and then it's done. You got to plan out, though, your retirement and then education for children. If that's important to you. Not everybody has that same philosophy. My parents paid for high school and they said you pay for college. So Okay, that was their philosophy, and it worked out for me. But you decide for yourself what you want to build for your kids if you have them. And then real estate investments. I know a lot of people like to plan and build that out. Again, I just did it myself with my own retirement plan, thinking it out, because I'm going to have my associates basically rent the place for me when I retire, and then I'll have the rental income from upstairs. So I do it myself. Actually, I bought my first house when I was 11 with my dad in South Jersey. So I've been in real estate a long time myself. It's always been a good investment for me. So when we're thinking about the future, how are you going to grow it? And we can help you plan that stuff out. Next, JP, investing in your retirement, in your future for retirement. The things to think about is really all about asset location. All right. Are you putting aside money pre-tax? Are you putting it aside in the tax-free bucket? Are you putting it aside after tax? It's a good rule of thumb there. It says to save at least 10% towards retirement, but which retirement bucket makes all the difference? It's nice to save. I do 50-50 myself. So I max out what I save into my retirement plan. I'd save half of it into the pre-tax bucket. I can help myself with today's tax rates. But I also save half into the Roth bucket, pay the taxes on that money today, because that money is all growing tax-free. And then when I get to retirement, I've got options. Some of my income is going to be taxable, some it's going to be tax-free, some is going to be interest and dividends and so on. But now I've got all the different buckets so that my effective tax rate is a lot less because I'm taking my income from multiple places. Okay. All right. Next. How's my audio been? Has it been better?
A little bit better, Jesse. A little bit better.
All right. Sorry, I saw all those chats later when JP was talking. I'm really bad with the text stuff. All right. Now, this is just talking about the limits. Just wanted to point out here where you can put money for retirement. The traditional IRA, Roth IRA is that first bucket there, and that lets you get in up to 6,000. There's a little bit extra when you're over 50. We're not covering that in this. I think that's an extra 1,000 that you can throw in there.
Yep.
Now, there's income limits when it comes to that first bucket. So for years, I couldn't put money into a Roth because I made too much money. But then when the Extra Act happened in the early 2000s, now they allowed for the Roth 401k, and 401ks don't have income limits. So now I can put money into the Roth through my 401k. The SEP IRA is what most realtors start with. This is like the starter retirement plan for most businesses. It allows for you to stuff its employer contributions only, not employee, but you're both of those people. Employer money only, and it allows you to put in actually 20% of your net. This says 25, but that's for regular businesses. Together, but they missed that. Sole proprietorships can only do 20% of your net. The Unit K or the 401k, we call it the Unit K because it's an owner-only 401k. About that is you don't have all the costs and expenses and administration of a big 401k like a corporation does, because it's just you, and you can't discriminate against yourself, so you don't have to do all the different testing requirements. So this allows you to put aside money as the employee and the employer, and you can stuff in as much as possibly 61,000 depending on your income. This lets you get the most money in through the traditional types of retirement plans. And for those of you that want to stuff 245,000, let me know, because I'll help you, because you can do a defined benefit plan. So we work with neurosurgeons, and they make like $1 million a year. They're limited to the 20,000 that they can put in the 401k. Well, that ain't going to cut it for retirement. So we set up a defined contribution program so that they can stuff 200 grand a year pre-tax on top of the normal 401k limit. So you can do the same for your business. So when you're really knocking out of the park, let me know. Happy to help you.
Jesse, one thing I'll share too is after the call, I'll share with Jen and the team a couple retirement grids and brochure, just kind of overviews the different business models or retirement accounts you guys can set up, as well as a helpful tax facts at a glance. So therefore, if you are curious about what is my limits for this year, what can I do for upcoming tax season, more than happy to have a one-on-one with you guys. But we'll definitely share some literature after our call so you guys have that breakdown as well.
Yeah, we kind of shoot that out to you every year, that tax facts piece. So you have all these different numbers and stuff. And it's helpful for your own clients too when they have these. All right, and then non-retirement savings. You know, retirement savings is all well and good for 59 and a half and plus, but what about when you're younger than that and you want to have some money? So that's what the non-retirement savings for. It's really also for liquidity. It's important to have these things kind of set aside when you are going for credit to a bank. They do kind of look at this a little differently than they do your retirement account because they know that your retirement account is restricted. And the worst thing that can happen is when we're stuffing only money into the retirement account, and then you really need money, and then you got to pay all the penalties and the taxes when you raid your retirement account. So we got to have other places to put money. When I come back to that asset location piece again, this is the bucket one where it's after-tax money, but as it grows, it creates 1099s. So I got to pay tax on it every year, but it's the liquid bucket. So this is a really important bucket to have. Most Americans don't really have a lot in this bucket, and what they do have is just sitting in the bank. So we can invest that money that's sitting in the bank outside of retirement accounts and just get things like mutual funds and stocks and bonds and all those kind of things. So if you need help kind of growing your after-tax money and you have some of it sitting around, you know, we weren't getting any interest, and now all of a sudden we're starting to get interest. The interest rates have come up 300% in the last year. So all of a sudden, cash was paying zero. Now I can go get a T-bill and get 4%. So the whole environment has changed when it comes to savings and fixed income. So if you want to put some of your money to work, not necessarily stocks, because you're not comfortable with the volatility of the market. But that being said, everything's on sale. So if you have some money to invest, it's a great time to buy. It'll recover. Even if it keeps going down in the next year or two, it's okay. Keep buying on sale. But if you have safe money that you want to put to work, bonds are really looking pretty good now. So start looking at those types of vehicles to start getting some better return, because not all the banks have caught up yet. Most banks are still paying 0.1. I just had a client who bought a CD for like 0.06 or 0.6. And I said, what? You need to talk to me about that stuff, because you can get significantly better. And not all banks are going to get caught up that fast. So, all right, lastly here, I think that is it for us today. So any questions for the group? I'm going to look at that chat button. Actually, sorry, John, I saw you kept complaining.
Questions come in the chat, but if you have questions, feel free to unmute yourself and ask away, or you can send them in the chat if you would prefer to do that. We can get them answered for you.
Yeah, again, so the big questions that you might have are really about your business structure. And if you want to have a talk about that, then what we would do is probably set up an appointment with our attorney, Jim Frank. He has his LLM in taxation. He's fantastic. So usually I'll include him to kind of help with those conversations. Again, we don't charge a fee for Jim. He's just available when you need help. Same thing on the estate planning stuff. You never ever need help with that, parents and yourself. We don't do your documents, but if you need help with it, let us know, and you can talk it out with me without getting that hourly rate from the attorney, and then we can give you basically a percentage to the attorney, get those things done. And then same thing on the tax side. Most people have a tax preparer, but they don't really have a tax advisor. So keep your tax preparer, but you can lean on us when you have questions about, on the tax advice side. All right. Well, thank you everybody for attending.
Thank you guys.
I hope my audio wasn't too bad and it got better. I don't know if it'll get saved, Maddie, in the recording. Better.
Yeah, we did. I recorded this, so we will make sure that it's available to everybody afterwards.
All right. Thanks all. Anybody needs our help, just email us and we'll help you out.
Thanks, everybody.
Thank you guys. Have a great day.
You too. Bye-bye.